Homebuyer University back again, and today we're talking about the elephant in the room, the jumbo loan. Andrew, what is a jumbo loan?
In short, a jumbo loan is a loan that is higher than the conforming loan limit for the county that you're purchasing your home in. Now, Dom, can you decipher what I just said?
Yeah, that was a lot of high-level mortgage speak, and so I want to translate that into something that us normies can understand. A jumbo loan makes you think that it's a really big loan, when in short, it's really just a loan amount that's over a certain limit. Each county nationwide has a maximum dollar amount that the government will lend in that area. They basically say, hey, based on home prices, valuations, and incomes, this is the maximum amount that we will lend out and insure. Any loan amount over that government threshold is going to be considered a jumbo loan. Now, what does jumbo mean for you? Now, a jumbo loan is not backed or insured by the federal government because they're those larger loan amounts than what the government backs and insures. As a result, they are a little bit harder to qualify for because there is no governmental safety net on them. Andrew, can you give us a couple factors that might be a little more stringent when trying to apply for a jumbo loan yourself?
Jumbo loans, because they're above the threshold that the government likes us to lend out, they don't have that safety net, they don't have the government insurance, and they're not backed. As a result, these banks really want to make sure they're protecting their asset, which means you're going to be under a microscope.
Because the risk is all on the bank without any sort of governmental safety net, like Andrew said, they really put you under a microscope. So they are going to be more critical than any other loan program out there, which makes them the most difficult to qualify for. They won't just look at your credit score, but they're going to look at your past credit activity, how many accounts you have open, what types of accounts, and how long they've been open. They're going to look at your assets, not just where the money's coming from to buy the home, but to also make sure that you have assets left over as a safety net. They're also going to be looking at your rental history to make sure, hey, you have a history of paying your housing budget on time every time. They may also be more critical on your income with a much further analysis on where your income comes from, how frequent it's been, and how long it's been established. Ultimately, jumbo loans take the government guidelines for loans and then fill them with a bunch of steroids and make them even harder to qualify for to make sure that their risk of not having that governmental safety net is protected.
In conclusion, jumbo loans are simply above the governmental threshold, which in return means that they're a little bit harder to qualify for, meaning you'll have to do just a little bit more work.